$20 billion as we look into the future, which is what investors should look at, because you have to keep emotions aside. You have to keep valuations, the relevance, and cash flow generation as other metrics which will decide your future course of return. So, not just Paytm, all other startups. Will the startups from these valuations, and not even valuations, forget valuations for a minute, because valuations is a function of how you grow and how you control your losses. From these market caps, Zomato's market cap more than about $20 billion. Paytm's market cap $20 billion. The market cap of Nykaa over 1 lakh crore. Can they be substantial multi-baggers? The idea is that out of these 4-5 companies which have listed, are we likely to find an HDFC Bank of 2000, a Bajaj Finance of 2010, or a DMart of 2016? I doubt. That is the point I have, that the importance, relevance, significance, it's still there. But can these be the future multi-baggers from this kind of a market cap? That is what I think we are debating, and that is where I think I have my reservations.
क्या है उसका लिस्ट? Okay, let's take this discussion forward. We have with us Anurag Singh, the managing partner at Ansett Capital, and we also have with us Dikant Haria from Green Edge Wealth joining in to take the debate for Paytm forward. While investors have clearly, sort of thought on their feet, they didn't participate with as much gusto as we've seen in the last few IPOs. In the IPO itself, which got a very lukewarm response from D Street, and so has been the case with the listing as well. But gentlemen, morning. Digant, if I could come to you, there are also many who believe that Paytm in the long run can do to private banks what private banks did back in the day to PSU banks. Given that thesis, do you think maybe not today, maybe not tomorrow, one needs to have investment into Paytm at whatever price?
Yeah, hi. So see, since you have referred to the history of private banks disrupting PSUs, I think Paytm also has some history, and that will give us a lot of insights into what it can do in the future. So if I have to summarize that history in one line, Paytm is a great company, but in a wrong country. Let me just elaborate why I say that. So Paytm started as a wallet in India. The wallet got disrupted by UPI in a very big way. Payments became a loss-making proposition for everyone. You could not earn revenue from payments. So Paytm went and decided to start a Paytm mall or something like e-commerce so that you can get more customers and you can eventually cross-sell. That model failed because you had the Amazons and Flipkarts of the world, and they did not have the backend also to do it. Now they're so that is what the history was. They also decided, okay, we'll go into broking, we'll go into mutual fund distribution, but there is very little to boast about all of these things today. And see, they have spent around maybe 14,000 crores in losses, or to just get revenue of 16,000 crores over the last few years. So to say that will it disrupt the current banks, it looks very, very difficult to me, because today if you see what is Paytm banking on, Paytm also knows that payments is not going to generate any profits as such, because in India you cannot do that. So Paytm is trying to get customers so that it can cross-sell and give loans to them. Now, so what can Paytm become in 5-10 years? It can at max become a company which has 1 lakh crore of loan book. We already have a lot of such companies today, and they don't trade at the valuations that Paytm trades at. So I think it is like, too much of crystal ball gazing if we say that Paytm of today can actually disrupt the private banks. I'm thinking more like, Paytm wants private banks to be their partners at best. I don't think there is a disruption that Paytm can do. That disruption chance was there in 2015-16. I don't think it's as strong today. And they say that they are PayPal's of, they are a combination of PayPal and Alipay's of the world. I think they are none. They are, at best, they can be a very large broker who can sell loans and investment products. So that's my opening comments. Yeah.
That's a very strong opinion there. Anurag, hi, good morning. Let me get you in onto the discussion as well. What Paytm does in the long haul, what kind of disruption plays out that hasn't already, that's a thing of the future, right? It's crystal ball gazing, like Digant rightly mentioned it. What we need to look at is right now, wherein clearly valuations have been a concern with Paytm ever since the IPO pricing came out. But the question is, in the near term, would you be willing to buy it, say, 10% lower than the discount it's already listed at? At what price would you be comfortable to buy into Paytm?
So Aisha, good morning. First of all, pleasure being here on the show. Look, let's rewind back to 2000 when a set of newbie investors came to the market. They supposedly were tech savvy. They understood. They believed more in the dreams and less in financials. They 20 years later, a newbie set of investors are back in the market. Again, never mind the financials, they believe more in the dreams. And I think they're going to learn a lesson of a lifetime in investing. The lesson is this: if you buy something at a wrong price, that bad decision haunts you for a very long time. My favorite example on this is Microsoft. If you bought it, by the way, it was a great company in 2000. If you bought it at $60 in year 2000, you had to wait about 16 years till 2016 to just break even. Now, with that context, I think I fully agree. I was hearing Nikunj. I think if Paytm at 20 billion is saying that I am like, 65% of Axis Bank, I am 40% of Kotak Bank, I am 30% of ICICI and 20% of HDFC Bank, I really don't believe it is kind of even remotely possible. And I think let's just kind of look at a couple of quick pointers here. They want to be this super app. Look, but even after 7-8 years into existence, they've hardly made any dent into brokerages. They've hardly made any dent into the banking space. I agree, payment bank is the limiting factor, but look, average balance in a payment bank account is just about 500 rupees. Do what you want to do with that. They've hardly made any dent in the lending space. So, look, I can buy dreams, but there's only as much that I can pay for it, right? Finally, I think they can't made this a point, but look, I think we have to believe technology is a very fast changing space. You can disrupt, and the other day you can get disrupted. So after demonetization, Paytm really was the first brand recall. It really disrupted, but I think UPI kind of disrupted it, back again. And today we have a market where, a winner takes all kind of a market, this whole internet space. People don't remember anything more than the first two players, and 80% of the UPI market is dominated by PhonePe and Google Pay. They have deep pockets. I don't know, with 12% market share, how does Paytm bounce back from there? So I think with putting all of this in context, I think if you are not a market leader in any of the places, I really find it very difficult to believe how Paytm can really bounce back from here. These kind of valuation really is financial insanity. I wouldn't, to answer your point, I would not even be comfortable at less than 50% discount to the current pricing, because I don't really see a path to Paytm's market domination and the kind of dreams that are being propelled. Never, keep in mind that it's 5 years after demonetization that we are talking all of this. Aisha?
Anurag, the points what we've discussed, they are valid, and I fully agree with them. But I'm sure the management of Paytm is also aware of what the need of the market is. VSS understands that he needs to be profitable. VSS understands that he needs to be number 1 or number 2 player. He's got a board which is full of P guys who understand how to value markets. What if Paytm decides that, look, we want to make big changes? Their total cost of acquiring customer has come down. The total advertising spend has come down. What happens in next 2 years? Paytm gives a very clear path to profitability. Could that change, Anurag?
So Nikunj, look, the take is very simple, and we've spoken about all the other players. There's Policy Bazaar, there's Nykaa. I think very interestingly, all of them have certain common dimensions. They're all trying to position themselves at about 45 times sales. There are no, history tells us that at 45 times sales, there's very hard to make money from this point. Nikunj, to your point of, they can try and be all of this. Look, here is the point. Maybe they can, I'm not disputing that Paytm can't, with due credit to the entrepreneurship spirit in India, people have put in the hard work. The only limited point is the whole idea of VCs coming in was that they give a path to profitability to the company, and then really they let the market decide the price and take it on from there. Here we have 10 years down the line, the company is still making losses, and VCs are giving the company back to the market while it is still making losses. Very interestingly, all the three companies show one common trend. Final year, suddenly I see FY21, the promotional spends drop very sharply. So promotional spends were 95% of sales in FY19 for Paytm. They dropped to something like 40% of sales in FY20. FY21, they're just about 20% of sales. I don't know how this is sustainable. I mean, of course, you're coming to an IPO, so there is some bit of a window dressing that goes on, but I really don't see a positive gross margin also in the company. I compare with PayPal, which is operating at a 45% gross margins in US market and at 20% net margins. Paytm is not even positive on gross margins. How do you come back from there? Nikunj?
Right.
I take the point that you folks have also been making that, look at a phone pay or look at a Google Pay, they have a 45%, 35% market share. But then just on the flip side, and playing devil's advocate here, long term, won't the markets also reward the nimbleness and the agility of Paytm? Its monthly revenue is what PhonePay's annual revenue is. It made a mistake on UPI. Yes, it's a distant third large player, but it's clawed back to a 12% market share. It is putting its hand in every jar, literally, when it comes to the financial ecosystem. So the question that Nikunj was also asking in the morning, okay, you have a tepid listing, it's not the backup, but can you afford to ignore Paytm going forward? And therefore, is this going to be a lambe race ka ghoda?
So maybe I'll start on this, Aisha, a little bit. That let's see, let's say we are all negative, or we all have some sort of a negative view on Paytm. But if as you said, just play a devil's advocate as to what is good with the company. So the whole idea, why are such big P's and Chinese, the Alibabas of the world backing Paytm? Because they just thought that what happened in China, the super apps called WeChat and Alipay, the same thing can happen in India. And then once you have crores of users on your super app, you can just cross sell and become a mega company, something like what Alibaba or Alipay is and Financial is in China. But see, one very basic point I would like to make, what is a super app? A super app will have a lot of services. Paytm ticks the boxes. Okay, the app has everything that you need. But the second most important thing is the users should spend a lot of time on the app. Okay, now if you look at a WeChat or an Alipay of China, people spend 2 to 3 hours a day on that app, and which is why they kind of use 10, 15, 20 different services from that particular app. If you look at Paytm, the average transaction size is just 650 rupees, and that too because it is free. 650 rupees. A credit card average spend is 4,000 rupees. Now it just tells you that Paytm is just being used by people for very small ticket payments, maybe when they go and buy their groceries or very, very small ticket items, and they don't think of Paytm as anything else. Like when I want to eat food, I think of a Zomato or a Swiggy in India. When I want to travel, I think of IRCTC or Make My Trip. When I want to trade, I think of a Zerodha or an ICICI Securities. So what is the use case that we are talking about here? So we would have taken Paytm really very seriously if there was a very, very serious use case. But here Paytm is fighting very strong players on all the sides. There is one thing which will be very positive for Paytm if the government of India allows that for every payment you can charge 10 paisa. But it's just like saying that I will take away some for Paytm to reach profitability, I will take away something from the entire Indian consumers. I don't think that's going to happen. Even if that happens, banks are going to be bigger winners, and the competition will anyways price that 10 paisa down to zero. So, whatever way you look at it, Paytm has a very, very difficult task. And, as Anurag was mentioning, that 45 times revenue, the PayPals and every other, the PayPals, the Square, all other companies of the world trade at maybe 10 times revenue, and they are already humongously profitable, as Anurag was saying. So I just think that, even if we don't ignore it, because right now it's hard to ignore the fintech companies, but the business does not give you comfort. The ecosystem which it has built does not tell you that it will dominate, and the valuations are such that it is already equal to an Axis Bank, or just 40. Axis Bank generates 10,000 crores of profit, whatever said and done today. This Paytm has 3,000 crores of revenue. So, people may not want to ignore it, but the writing to us, at least the fundamental guys, seems very clear on the wall that we are paying for some great thing which may happen in 2030. It's not a bet where odds are stacked against you. So yeah, that's from my side. Thanks, Aisha.
Both of our guests for joining us live today. So you have seen the listing at 10% discount. The stock has gone down